Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, June 4th, and we are now in the last hour of the market. As many of you know, I believe that the prices that are as close to the closing are the most valid prices and legitimate prices of the day, and therefore I use those prices to make the majority of my entry and exit decisions. So we are having a big day in the market today, which is nice. Seems like it's been a long time since we've had one of those. The Dow was up 1.76%, the Nasdaq is up 2.2%, and the S&P is up 1.75%. And people are attributing this to comments that the Fed made about accommodating any recession or any issues with the China trade deal. With interest rates. So anyway, that's good. Really nice to have an update today. A lot of decisions to be made for me today, and I'll be going over all of this. So here's the format for today. We're going to run the legal disclaimer first, then we're going to take a look at my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to go through my watch list, take a look at all the stocks in my watch list, go through them, look for the technical support and resistance, and see if there are any potential entries that we want to make today based on the technicals. And then after the market closes, if anyone has any questions at all, I'm very happy to answer them. Or if you want me to take a look at any particular stock, I'm very happy to do that as well. So let's go ahead, run the legal disclaimer, get that out of the way, and I will be right back in 40 seconds. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Hey, David Gordon Russell's here. Hey, Dave. Nice to see you. Thank you for coming by. Hey, Mount Doji. How's it going, bud? William is here early. Nice. Good to see you, William. Ramble Ron, what's going on? I haven't seen you for a while. I'm glad you're back. Always nice to have you. So, well, interesting day, right? Well, let's get right to it. I think we're gonna have a lot. I think we're gonna have a lot to do today. So first off, Boeing. Well, I did buy Boeing yesterday, and why did I buy it? Well, for a couple reasons. Mainly, we had this low, we had this previous low, we had a rally, we came back down, we made a lower low than the previous low, but at the same time, we had a very nice divergence. And what is the divergence? That when the MACD readings, the histogram bars on this first low are very deep, and this second low are very shallow. That indicates, MACD is a momentum in trend indicator, so this indicates that this second bottom did not quite have the power of this first bottom. And reverse logic will tell you that if you're running out of momentum to the downside, you might be going up essentially, because you don't have the same oomph as you did on the first one. So so that was one. We had the double bottom with the bullish divergence. We closed back up into the previous range yesterday. This was the range. We went up, we came down, we broke out to a new range, closed back up into the old range. And I always like when you have a range that you bust out once and immediately reject it, instead of going down, hanging out a while, then trying to go back up. To me, that's not as strong in my experience. And then thirdly, we had this kangaroo tail. And what's a kangaroo tail? That means when it opens, it goes way down and then closes right back up, showing that there were no sellers in this area. This can happen to the upside or the downside. It could open, go way up, and close way back down. That would be a bearish kangaroo tail, but this is a bullish kangaroo tail. And on top of that, we had a lot of volume, right? So think of volume as votes. There's a lot of votes that this reversal was real. So we bought it. We did hit one profit target today, which is obviously nice. It's about 20% profit target. My initial profit target is up here at the pink line. This is the 50 RSI. My secondary profit target is the 200-day moving average. So moving forward here, these counter trend rallies are a little bit more difficult and maybe a little bit more subjective. The 10-day moving average should offer some support. If we close above that 10-day moving average and then close down below the 10-day moving average, that may be a signal for me to just go ahead and lock in the position. Or if we get a close below the previous day. So, obviously tomorrow, if we had closed below the previous day, if we had closed the low of today, below the low of today, that would also be a reason to go ahead and lock in profits, because, I don't want to let it go all the way down here to like a 30 RSI. Possibly down here back into the old range might be an option, but like I said, these counter trend rallies, there's really kind of an art to them. Phasing out is always a really good idea, and it makes the decisions easier because you have fewer shares. But currently we have rejected the 5-day. I don't think I'm going to base anything off of the 5-day. We're at a 40 RSI, so we still definitely have room to the upside. So I don't know what's going to happen, and we'll just have to make the decision at the time, maybe tomorrow, if we have some kind of negative price action. But right now, it's good. It's moving our way, and that's all we care about. Hit one profit target, and so we'll see what happens tomorrow. DDM. I did buy DDM yesterday. This is the double leveraged Dow Jones Industrial. Why did I buy it? Well, we went below the third ATR channel. We closed back above the 30, the third ATR channel, which by itself is positive because a large percentage of stock prices will stay within the negative third ATR channel and the positive third ATR channel. I think about 88% of all prices stay in between these lines. Doesn't mean it can't go under or go over, but if something happens about 88% of the time, that's good enough for me. So and then we also went under the 30 RSI and closed back over. So it showed intraday that there were no more sellers and under the 30 RSI, and that the market kind of gave us a little heads up that no one was interested in those lower prices. So we had to close under the third ATR, close back. We went under, we closed back over, and we also went under 30, closed back over 30. So as you can see, I did hit 3 profit targets right on cue. Do you see the kind of the fuchsia pink line here? That is the 10-day EMA. That's crucial, because a lot of times when you have rallies, deep dip rallies, you will rally to the 10 EMA, and you see how we're almost there exactly to the penny. So, I wouldn't blame anyone if it closed under the 10 ATR to lock in their profits. It's a 3.75% trade. But because I've gotten out of 60%, I think what I'm going to wait for here is I'm going to wait for either a close above the 10 and then a close back under, or probably a close in the bottom half, the 50% of this big bar, because this bar isn't really this big. It's actually this big. So with that being said, a close under the prior day low would also be a a good approach as far as how to manage this going forward. So, this is a tough trade going forward. Remember, higher lows. I always talk about higher lows. Well, here we get overcome by sellers. Buyers finally stepped in. That would be us. Once it starts moving up to a certain point, people are going to want to lock in their profits. That's going to cause it to come back down. And then if it's strong enough not to go down and test the lows, then it could move up a little easier. But right now, moving up from here is going to be more difficult because all the people that bought here are looking for some kind of rejection or some kind of bad price action up here to lock in their profits. Just exactly the same way I'm thinking right now. So I hope that makes sense. So anyway, great trade on DDM, obviously. Initial profit, actually my first and my second profit target are here because that's about the 50 RSI. And if it can close back above the 200, then I will probably just add a fresh position, then using the 200-day as my initial stop. But right now we're out of about 60% of this trade. It's been a great trade. Disney, I did buy this yesterday. And why did I buy it? Well, we had a valid V2. Here's day 1, day 2, day 3. Day 2 washes out day 1's low. It almost triggered a V1, but you see how it closed below the close of day 1? So that does not count. Yesterday confirmed the V2. Okay, 3 bars in a V2. Day 1, day 2, day 3. Day 2 takes out day 1. Day 3 closes above day 1's close. And it also closed above a 50 RSI. We had some strong volume, as you can see. We did hit one profit target here today. You can see we're very, very close to that second profit target right now. Hopefully we will hit that at the end of the day. We're only about 6 cents away from that. So actually, what I'm going to do, I'm going to just go ahead and take that because the risk to reward ratio, I don't care about the 6 cents just because it's there. I'm just going to go ahead and take that off.
Order filled.
Because I would be more upset if I didn't take it and it didn't hit and it went down while it was so close. Just wouldn't make any sense. All right, so just give me 1 second. Just going to take these off in both accounts.
Order filled.
134.42. All right. Always feels good to lock in a little profit, doesn't it? So that's 2 profit targets there during, that's 2 profit targets for the day. So that is about 22% total, about 11% here and about 11% there. So my initial profit target on Disney is going to be the way up here, the 70 RSI. Currently we're at 58.85. So that will be my initial profit target. It has moved nicely away from the entry. So at this point, I'm not going to let it come all the way back down here. I'll probably start using a close below the previous day low or a close below one of the moving averages, most likely the 5-day or the 10-day. We'll just have to see. But anyway, really nice trade on Disney. Okay, gold. Well, this was a great trade. I bought this back here on the 30th of May when we had the 520 EMA crossover. MACD went positive. We were above the 50 RSI. It was on strong volume. We have scaled all the way out of this. I did hit one profit target here today near the very top. Currently, it's a 71.70 RSI, meaning that if it closes under 70 today, I will just go ahead and lock in the entire profit because if it goes over 70 and then closes back under 70, it means there are no more buyers interested above 70. So I hope that makes sense. I think we have about 25% of this position left, maybe 30. But boy, what a trade, huh? What a trade. Got up to the 6 ATR channel. Very difficult for prices to get above the 6 ATR channel. It's kind of an extreme reading. So, excuse me. So if this holds above 70 RSI, I will continue to keep it. When you get up into these really high stratospheric levels, then I'm going to target the 80 RSI when I do my formulation for phasing out. But I doubt it will get up there, but you have to have some kind of ultimate profit target in order to work your numbers. So anyway, great trade, and we'll see what happens. We'll see if it holds the 70 RSI. If it doesn't, we'll just go ahead and lock in that monster. Intel. I did buy Intel back here on the 29th of May. Why did I buy it? Because we went under the previous day. We were under the 3rd ATR channel and we were under the 30 RSI. The next day it closed back above the 3rd ATR channel in the channel, and it also closed back above 30. So those were two indications to take the trade, and I did. You can see it's just kind of been bouncing around for a while. It went up, we took a little profit target, went down. Yesterday, intraday, it was under the 30 RSI. So if it had closed under the 30 RSI, I would have gotten out of the trade, but it did close back above the 30. And so that's my filter, right? That's my signal. So it did hold above 30, which, obviously I'm glad it did, because we've had a nice day today. I've hit 2 profit targets today. My initial profit target is the 50 RSI, which is this blue line here. My ultimate profit target on this one is the 200 day, because if we got up to the 200 day, closed above the 200 day, I would just initiate a new position based upon the 200 day. We are, at least at the moment, looks like we're closing above we are above the 10-day moving average, which is very positive, actually, because I'm concerned about these 10-day moving averages at the moment. So 2 profit targets, MACD's positive. This looks pretty good, up 2.78% today. LMT, I bought back here on the 29th of May. Why did I buy it? Well, we had a nice up move. This high went higher than this high. We moved down, we moved sidewards, we stabbed down, reverse back up. Remember this pattern: higher high, move down, sidewards movement. The market attempts to go down, washes out the previous lows, creates a V1, and reverses. And it closed back above the 10, all sorts of good stuff. So you can see this has been a great trade. Hit 2 profit targets today. Currently we are at a 70.78 RSI. So as with gold, this is my ultimate profit target up here. As with gold, if it closes under the 70 RSI, I will just go ahead, lock in the entire profit on this trade. If it keeps above the 70, then I will go ahead and keep it. I think I have about 30%, 40% left in this trade. So this has been a wonderful trade, but again, it did go above the 70. If it closes above the 70, I will keep it and try to continue to scale out in case it goes parabolic. If it closes under 70, I'll just go ahead and lock in that monster gain. SPY. All right. Well, let me just quickly go over this for people that may be new today. I do buy the SPY every day at the end of the market, and then I sell it first thing in the morning. And why do I do that? I base this upon a study that was done since 1993. If you were to have bought the SPY on the open, which means in the morning, and sold it on the close, which means the afternoon, since 1993, if you would have done this every day, you would have returned a negative 5.2%. But if you did the opposite and you bought on the close in the afternoon and you sold first thing In the morning on the open, you would have returned 568%, meaning that more than all performance came in after hours trading. So it's pretty amazing. The long-term track record of this approach is outstanding. It does have drawdowns that can last a significant amount of time. This isn't something that works 100%. I mean, of course, nothing does, but you have to keep that in mind. You have to take the long view and position size correctly, not take huge positions because, hey, it made 568%. Well, it did, but that was very slow over many, many years, slow process. If you would have started here with huge position sizes, yeah, you probably would have gone broke, right? So, 5% position size, 10% position size. I use a 10% position size every day. Okay, so that is why I did buy it here at the close of the market, exited here at the open for a nice profit, but I also added a double position in SPY. And why did I do that? Well, because yesterday we were under the we went under the third ATR channel, closed back above, and we also went under the 30 RSI and closed back above, as with many other positions that we've taken. So two signals for me to buy that. So I bought my regular 10% position size just for the buy on the close, sell on the open, and then the other half of the position size I am just using this as a regular trade. You can see I've scaled out of 3 positions on that second half. I do want to bring your attention. Do you see how we're right at the 10-day moving average? See, that's concerning. I mean, see here, every time it got to the, well, here it was able to close, but here it tried, here it tried, here it tried, here it tried, and again, that's right where we're at. So we're going to have to watch that carefully. My initial profit target is right here, 283.50, which is the 50 RSI, and the ultimate profit target is the 50 SMA, which is up here at 286.30. So, I have gotten out of about 60% position. If I did not scale out and I had this full position, I might be tempted if it closed under the 10-day moving average just to lock in that nice profit. But because I have taken about 60% off the table, it gives me a little bit more latitude to give it a little bit more room to breathe. It also ran into the -1 ATR channel, which is also a little tough. So let's just see where this closes. I don't like the volume today. I mean, we're having a huge day up, but look at the volume. It's not that much. And remember, volume or votes. So I'm not sure we're getting a lot of votes into this rally. So I'll just have to make an end of the game decision here on what I want to do, because I don't like the 10-day and the -1 ATR channel converging and it stopping right on a dime. Thanks, Mount Doji. I appreciate it. Mount Doji, as you know from reading your book on the 10 EMA, right? Red light, green light. You see, this is a real life example of that being right at the 10-day moving average. So we'll just have to make a decision. But thank you. Yeah, great. They were really great trades today. In addition, luckily, I sold puts on Apple yesterday. So as long as it doesn't close at 160 by Friday, I get to keep all the premium. That gives me about 20 points. So I think I'm looking pretty good there. And Amazon, as long as we don't close under 1,500, I keep all the premium that I sold on Amazon as well. So those are looking good. Big day today. Big day, big profit day today. And I'm thankful for that. Okay, so those are the positions just real quick. Run through them one more time. Boeing, I'm going to keep this as long as it doesn't close above the 10-day and then below, or close below the previous day low. That's the plan on that. DDM, I'm going to make a game time decision here. If it closes well off of the 10-day, I'll probably just go ahead and lock that in. If it closes above, I'll definitely keep it. Disney, sweet, has moved up nice. It's only a 59 RSI. We have a lot more room to move on Disney. Gold, if it closes under the 70, I will get rid of it, but right now it's a 71.70. Intel, it is above the 10-day, which is positive. So as long as it's above the 10-day, I'll definitely keep this. LMT, it's a 70.86 RSI. So if it closes under the 70, I will go ahead and just lock in profits on that. And then SPY, I'm going to have to see how this reacts at the close around the 10-day moving average. But that was an awesome trade. Okay, real quick, before we get into taking a look, I like to put up these sayings by some of the best traders in the world because they're the best traders in the world. We should probably listen to them, right? But George Soros, it's not whether you are right or wrong that's important. It's how much money you make when you're right and how much you lose when you're wrong. And it's so true. I mean, everything is about keeping your losses small, letting your winners run. It doesn't matter if you win 90% of the time if you're only winning a tiny amount, and when you lose, the 10% of the time that you lose, you're losing a huge amount. It does not matter. Winning percentage is not something to flaunt. Some of the best traders in the world only win 35% of the time. But when they win huge, and when they lose small. So, listen to George Soros. It's not whether you're right or wrong that's important. It's how much money you make when you're right and how much you lose when you're wrong. So, in other words, keep your losses small, let your winners run, and do not worry about your actual winning percentage. It's not like having stats in the NBA. The bottom line is the only thing that matters. Okay. Hey, Steve Burns is on today. Oh my gosh. Hey, Steve. How you doing? Man, I'm so honored that you're on today. Look at that, Mount Doji. Mount Doji just bought your books a couple days ago. Oh, buddy, I'm so glad that you're on today. Really honored. Thank you so much. In case anybody doesn't know Steve Burns, he's famous author, famous trader, mentor. Has made a huge difference in my trading career. I'm glad to call him a friend. And so, boy, thanks so much for coming by. And if you don't follow him on YouTube, it's Twitter, S Joseph Burns, at S Joseph Burns. And I couldn't recommend his channel high enough. He always has great things on there. You're learning from me today. Good. Awesome. Well, thank you so much, Steve. I saw your trades as well. Steve has a nice trade in IWM, I believe. He has a nice trade, double leverage trade on gold. I believe he bought Facebook today or yesterday. Yep, he bought Facebook at this bounce off the 200. So anyway, thank you again for coming by. Really honored. Hey, Andy, love Steve Burns books. They're the best books. I've read them so many times, I think I have them memorized. And Frederick's here. Hey, Frederick, how you doing, my friend? Great to see you. All right, well, let's take a look, and let's go ahead and see if there's anything in my watch list for the end of the day. Apple. Apple did go below the 30 RSI, closed back above the 30 RSI, and it also closed back into the third ATR channel, which is positive. The one thing that concerns me a little bit about Apple right here is that we are at the 10-day EMA, which is often going to act as resistance, and we're at a 39.94 RSI, so 50 RSI would be my initial profit target. Initial stop would be a close below. I think I'm going to pass on Apple. I don't really like the volume. And I think there's some other positions, maybe like the Tues, that I think would give a better risk to reward ratio. Plus, I already sold puts on Apple, so I don't want the added exposure from Apple. Buy and Sell Signals. Love that book. Love that book. And Steve has your brand new book. Steve, what is that right offhand? Actually, I have it down in here in my recommended reading. Let's see. Oh, The Ultimate Trading Risk Management Guide by Stephen Holly Burns. Love that book. That's Steve's latest book. And, in it, he talks about, there's all these books that talk about, technical analysis and setups and all this kind of stuff. But there's, there were not enough books being written about the risk side, which is ultimately the most important side. So I would really recommend that. I have the link to, oh boy, sorry. This platform makes it hard to copy stuff. Oh, are you kidding me? Okay. Here we go. There we go. That's the Amazon link, everyone, to the Ultimate Trading Risk Management Guide by Stephen Holly Burns. So check it out. It's a great book. All right. Sorry about that, everyone. All right, so Apple, I'm going to pass on Apple. Amazon, we're having a nice rally today. I'm concerned about the previous bar, which was yesterday, being so big, so far down, so much volume. We've stopped about halfway of the bar, which is about where it should run a gas. I'm just gonna let this one go. I mean, it could be a decent trade, but I just don't like the huge skyscraper bar preceding it. Boeing, we have that. We have that. So I'm going to keep this one unless we have a close below the previous day low or reject the 10-day moving averages or hit my initial profit target. Alibaba is having a nice day today. We went from under 30 back over 30, which is positive. We are back into the channel. So possibly I'm going to take this one. Remember, these are all under the 200-day moving average, so I always take a half position when I'm under the 200-day moving average. Caterpillar did go from under 30 over 30. It rejected the 10-day moving average, so I don't think there's anything interesting for me on that. Canopy Growth. Let's see what the RSI was yesterday. RSI was 3081 yesterday. We have moved back above into the we have moved above the third ATR channel and back above the 250 day, which is positive. We're at a 3843 RSI. My gut on this just tells me no. Cisco, we did bounce off the 200 day. We're at a 4473 RSI. Nothing interesting there. Delta Airlines, nice big strong move above the 200 day today, which is positive. The only issue is currently we're at a 4781 RSI. So, I feel like there's going to be some inherent resistance at the 50 RSI. So I think a lot of this initial move is gone. Maybe not long term, but from a trading perspective. So I'm not going to buy at 47 and try to target a 50 because it skews my risk to reward ratio. So I'm going to let this one go. If this were to move back down into the range of this bar, possibly halfway bar, then that would give me a better risk to reward ratio. It would give me a smaller risk and a better risk to reward ratio. So and also we're coming from a lower low going up. The people that bought here are going to be looking for any sign of weakness here, and to lock in their profits, that will move it down. What I really like to see, I'd like to see this go back down, close below the 200, and then move up. That would be a much better entry, in my opinion, because now we would be working from a higher low standard. DDM, glad to see it's holding above that 10-day. If it holds above the 10-day, I'm definitely going to keep it. We'll have to watch that. S&P, nice strong break above the 200-day, but again, it's at a 44 RSI, and I already have DDM, so that would be duplicate. Disney, we have based upon that nice V2 and rejection of the -1 ATR channel. So this one obviously is looking very nice. We'll target the 50 RSI. Etsy's down today. Etsy's down a penny, so nothing there. Facebook, nice trade, Steve. Nice trade. So nothing on Facebook for me here, although it did close above the 33 RSI. But at this point, right now, we're halfway of this bar. I think the better place to have taken it is where Steve took it, where you had the bounce off the 200. But right now, I'm a little concerned because of this big bar. 5 below, nothing really there. Gold, we still have gold. It's at a 72.15 RSI, so we're going to keep this and continue to phase out as it moves up. If it does close under the 70, we'll be out. Google participating a little bit, not that much. It's a 27.60 RSI, so I would not be buying that. At the very least, I'd need that to close above the 30 RSI. Goldman Sachs, nice big day up today. It is back in the channel. It went from under 30 over 30, but we have rejected that 10-day moving average, at least so far. And now our risk to reward ratio is a little skewed. I think we have more risk to the downside than to upside. 50 would be my initial profit target on this. So I don't think there's not anything there that I like. Here's one trade that I missed out on that I wish I would not have. Here we have the low, we have the rally, we make the lower low, we have the bullish MACD divergence here. Yesterday we moved back up into the old range. We had a one-day false breakout and immediate reversal, moved back up. So I did not get that trade, but that's one of those ones that you look back on and you think, oh, it'd been nice to have had because it was legitimate, but we had plenty of other positions. Intel. We do have this one hit 2 profit targets today. We're going to be watching that 10-day moving average at the close. The Russell, boy, nice big day today on the Russell. It's a 44 RSI. It's nice and strong. Volume's not that great, but again, the initial profit target would probably be around the 50 RSI. So at this point, the risk to reward ratio is skewed in my opinion. So nothing there. Coca-Cola has a bit of a reversal here at the top. So nothing on Coca-Cola. Lockheed Martin we bought here. It's a 70.63 RSI. I will be keeping that as long as it holds above the 70. MasterCard, nice rally back into this large bar, but you see how we're at a 49.86 RSI. So it's running into that 50 RSI at the moment, and especially up against the big bar here. I would not have any interest in that. Merck moving up nicely. It's a little too high, a little too range bound for me. Microsoft, nice attempted rally here, but we're gonna be pretty right in here. We're gonna have a 50 RSI, 50-day, and all these other moving averages resistance here. So I would not be buying Microsoft here. Netflix had a nice day. Bounced off the, I think we closed under the 200 back above, but right now we're at a 47.56 RSI. So again, we're going to be running into that 50 RSI resistance. Nike, nice strong day. The only issue again though is the people that bought down here are going to be looking for any weakness. They're going to be looking for a 50 RSI target. So it concerns me to buy here when so many people that bought down here are thinking about selling. Again, if we move back down in the coming days into the halfway range of this bar, closer to the 200-day, I might be interested in there because it'd give me less risk and a more reward. So I'm going to let this one go. Philip Morris. Not bad. I trade Philip Morris a lot, actually. We were at 29, 24, 31. So yesterday looked like it was probably the day under 30, back over 30. I'm just going to let that one go. PayPal, about halfway of this bar. We're at a 47.42 RSI. It just concerns me to get involved with these big bars. So I'm going to let that one go. QLD had a nice day up. Actually a V2 here, right? Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. I think on the QLD, I would actually just wait for a close back above the 200 because we know the back test on the 200 QLD works well. QQQ. All right, so this is interesting. Let me show you quickly on ETF replay, and I use this by permission of ETF replay. Let me show you two back tests. Here's the Qs based upon a close back above the 200-day moving average. So the buy above, sell below the 200-day on a closing basis, that returned 128% since 2000. The regular buy and hold during the same period returned 127.6, so very close. But the Q back test only had a 43.6% drawdown, where the buy and hold had double that. So, you know, it back tests okay. I mean, it does back test well, definitely better than buy and hold. But what I'm really looking at today, everyone, is the 250-day moving average. The 250-day currently is at 174.19, and we are above that. I better write that down, actually. 174.19. So if we go back to ETF replay and we switch that around to the 250-day, well, let's look again. 200-day, 128 compared to 127, and minus 43 compared to 83. So let's switch that around to the 250-day moving average. And the return, much more impressive. 306 based upon above, below the 250-day moving average, only a 28.4% drawdown compared to buy and hold 142 and 83. So what I'm going to do is I am going to take a position in the Qs based upon a close above 174.19, the 250-day. That's this little line here. And if I get a close even a penny below that tomorrow, I'm going to stay out. If it closes above and keeps going, I will just continue to hold that and scale out. So Qs is one that I'm really looking at here today. SLV. I was waiting for the 520 EMA crossover. So I am going to be taking that. Let's take a look at AGQ. AGQ is the double leveraged crossover, and this back test, this is, you know, quantified back testing system as well. I don't think I want to use the double leveraged. If I did, I would just use a half. But we had a nice trade on silver the last time, and so I will be buying this at the end of the day. SLV, a regular position because the 5 crossing over the 20-day moving average. SPY, we have that. Obviously, I will be buying that at the end of the day, my regular overnight trade. Square. So I did buy Square. Let me take a look real quick. You know, most of the time I wait till the end of the day, but in this particular case, 62.84, I did buy Square earlier in the day, right here when we got back over the -1 ATR channel. And you can see we had this low, we had a rally, we went lower, see the divergence, deep MACD bars here, shallow MACD bars here. It was a one-dayer. It just one day went down, tested, not a lot of sellers down there, immediately reversed back up. So I did buy this here, and a nice V2. Here's day 1, day 2, day 3, day 2, washes out day 1. Nice reversal. So I did buy this a little earlier today at a little better price. So I will be keeping this, targeting the 50 RSI as my initial profit target. And my initial stop here is going to be halfway of this washout bar, day 2 bar right here. So I'll just put a little red line here so you can see. because it should not come back down to and close halfway below this washout bar. So this has turned out to be a nice trade as well. So we do have that. AT&T, 49, 50, 69 RSI. So that's, you know, I imagine it's going to have an issue moving back up here. Here's bonds. We were talking about this yesterday. Let's keep a lookout for bonds because once they start going down, that will be good for the stock market because so much money is going into bonds and risk off assets. And that's what happened today. Does not mean that this is the end and this is the bottom. By no means does it mean that. So, but you know, this is something we should watch. So Tesla Motors, you know, Tesla is a little bit interesting to me. You know, it has dripped down here. It has moved down slowly. Today, however, we have this beautiful V2. Here's day 1, day 2, day 3, day 2 washes out day 1, and day 3 closes above day 1's close. In addition, we've gone from under 30, back over 30, under the third ATR channel, back over the third ATR channel, and the RSI is still relatively tame at a 33, so we do have some upside potential to the 50. So I am going to go ahead and mark Tesla here. I'm going to buy a half position because we are under the 200-day moving average. So I will mark that one. Natural gas went from under over 30, but I don't like it because it's under the third ATR channel. Oil still under the 30. Visa, nothing there. VIX has moved down substantially today, which we could expect, but it's back down here now with some support. So that concerns me a little bit about the market. Verizon, boy, see, we're talking about this going under here when the buyers or the sellers finally ran out and started going up. The people that bought here are going to be looking to sell up here, and that's exactly what happened. So if we had a close under the 200, then a close back above the 200, that would interest me, but nothing on Verizon today. Energy, really nothing there. Financial, really nice, big, strong move up, but we're at a 50 RSI. Has closed a bunch, but I think I'm just going to let that one go, folks. I do think long term we're going to have an upward bias to this, but I just think on the short term we're a little extended. You certainly can make a case for it. I'd like to see if the market took a breather tomorrow, I could buy closer to maybe halfway of this bar and give me a better, smaller risk and a greater upward. But right now we're at 50 RSI. This is where it probably will run out of gas, and it still has this 50-day moving average right above it. We've had a huge day today, P&L wise. So it's important that you don't get cocky and feel bulletproof when you have big days, because that's when a lot of people start taking on too much of a position because their emotions get the best of them to the euphoric side. Healthcare, nothing there. All right, so we've got about 12 minutes, so let's look at our potentials here. Alibaba, not bad actually. Let me work up my numbers real quick on Alibaba. All right, so I would take a half position on Alibaba because it's under the 200-day moving average. And then Tesla. Would also be a half position. All right. So Alibaba does look decent here. I'm going to let this one go because we're to 43.86 RSI. I think we certainly could have a little bit higher run tomorrow, but I think it's going to, with these other moving averages above it and coming from a lower low, I'm just going to let that one pass. 3M. I do kind of like 3M here as well, and the reason why is, we actually, MACD is positive at this point. We were under 30. This is the first day we've gone over 30 on the RSI. We're actually back in the we're back in the channel above the third ATR channel. We're only at a 31.35 RSI. It gives me a pretty good risk to reward ratio from a 31 to a 50, and a close under 30 would give me the stop. So gotta say, I do like 3M here. Half position because we're under the 200-day moving average. That looks good. Silver we're going to be taking. Square I already took. Tesla. Financial, no. All right. So Alibaba is 33. 3M's 31. The Q's. I think what I'm going to do here, everyone, is I'm going to let BABA go because I don't want to have too much correlation. 3M, that looks fine. And then Q's, that gives us a little technology as long as it closes above 174.19. Silver, taking the moving average crossover, although this does seem a little bit high, but the RSI is still good. And I think I am actually going to take a half position on Tesla. So let's take a look at our current position, see if there's anything we need to do or need to let anything go. Boeing is fine. DDM, if it closes over the 10-day, I'll definitely keep it. Disney doing very well. Gold looks like it's holding above 70. Intel above the 10-day, which is good. Lockheed Martin seems to look like it wants to close above the 70, so that's great. And then the SPY. Yeah, SPY looks good. So I want to narrow something down here. Otherwise, it's looking like we would have just too many positions. Let's take a look at triple M there on the Qs. I think I'm going to let the Qs go. I'm sorry. I think I'm going to let silver go. I don't like the 200-day and the third ATR channel being right there together and the 50. I think I'm just going to let that one go. It's a mechanical system. It's fine to take it, but I just feel like there's too much overhead resistance there. Take a look. Risk Management Guide was surprisingly popular. Love that book. Just loved it. Any book, Mount Doji, that you read from Steve is well worth the money and the time, for sure. Haha, I have almost too many choices to pick from after moving average book. I know, right? Okay, so let's quick run through again. BA is fine. DDM is certainly fine as long as it holds above there. Disney's really doing well. Gold still fine. Intel is fine. Lockheed Martin is fine, and SPY is fine. All right, so that leaves us. All right, I've got to narrow this down, so I am going to let Tesla go. And it looks like the Qs are going to go ahead. All right, so I've got to get moving here and start making some moves. All right, so first of all, let me just add my regular SPY position here.
Order filled. Order filled.
All right, we have our SPY position. 3M, I'm going to wait and see how that reacts around. All right, I'm going to go ahead and buy the QQQ position. And remember, that is based off of the 250-day moving average.
Order partially filled. Order filled. Order partially filled.
174.73. 174.73. All right, so that looks good. Now, any other decisions we have to make before the close? DDM looks good. Disney looks fantastic. Gold still looks fine. Intel looks fine. Lockheed Martin does look like it's going to close above. SPY is really cranking. Do I need 3M? That's the real question. Do I need 3M? I think I'm going to let it go. I think I have enough. I definitely think I have enough. So we added the Qs. I added Square. All right. So we have some airlines. We have some Dow Jones. We have Disney Entertainment. We have gold. We have some semiconductors. A little bit of defense in the Lockheed Martin. SPY is the index, Q some tech, and Q some tech. So this looks like a lot of positions, but you have to remember most of these are half positions anyway. So boy, what a big day we're having. Woo, that's great. Yeah, I think I have everything. I don't even think I have to do anything. You know, we talk about the last hour of the market, and we also talk about the last minute of the market. So let's take a look here at the last minute of the market and see how much volume comes into this in the last. You can see it's picked up in the last 4 minutes compared to most of the day. Very, very, very small. These are minute bars, but you can see towards the end how much volume starts coming in. So let's see what happens and see if we get a lot of volume in this last 30 seconds. There it goes. You can see this last minute, this last minute of the day is going to be the largest volume by far of the day.
Order cancelled.
All right.
Order cancelled.
There we are. And you can see the last minute always has the most volume because that's when the majority of the trading decisions are being made. So it did close nicely above there. Wow. What a monster day. Monster day. Hey, thanks, Johnny. Good seeing you. I know we have to leave it too, so appreciate you coming by. So listen, before we get into any questions and answers, let me just mention, like I do every day, that I do offer private one-on-one coaching and teaching sessions in the evening time via Skype. So if you feel like you need some help with your trading, if you feel like some one-on-one time with me to kind of, take a look at what you're doing, what your process is, I'm happy to do that. I've helped many people with their trading and trying to get them on a right track. But usually it starts with a phone call or a Skype call just to get to know each other a little bit better. And then you can tell me about your history, why you got into trading, what issues you're having with, and I can sit down and design something that will fit your personality and your time frame and your financial situation. And so if that's of interest, my email and my hourly rates are in the description of this video. So, and then also, if you like today's podcast or live stream, whatever we want to call it, and you learned something, please do me a favor, hit the thumbs up button. It really does help with Google as far as letting people know about the channel and people interacting with the channel. So, and then lastly, if you'd like to share this on social media, tell some people about it, help grow the channel, that would be great as well. So, okay, that's my plug. And let's see, does anyone have any questions at all today about anything I did or any stocks you want to look at, anything like that? Boy, what a fantastic day. What a monster day. Where did we end up? 511 points. Well, I do want to say that, when you have an extended period of time where the market's going down, it kind of takes the wind out of you, especially if you have too big of positions. And a good entry signal can happen at any point, but you want to be stable enough that when that does come, that you want to take it. Because, I can't tell you how many times in the past where, I've had a bad week, bad 2 weeks, a really good position comes along and I don't take it just because I'm battle fatigued. And then of course, the rest of the story, that's the one that goes up. So it's always important to keep yourself stable mentally by position sizing correctly, so that even if you do endure a drawdown, you're not mentally depleted of your mental capital, so that you still have the ability to act when something comes along. So it's very important, because you never know when a great trade's going to come. But if you're so beaten down, you're just like, I don't want to take it. I don't want to just get another loss. So it's important to be choosy about what positions you take, but it's also important that you take the positions when they come. So I hope that makes sense. Mount Doji, I got a couple questions for you about your thoughts on three tickers, SMH, Snap, and ESPO. When do you think Uber will be worth following? Okay, we'll get back to that in just one sec, Mount Doji. Greg, you have the best YouTube educational trading channel I've ever seen. Great job, my friend. Enjoy it. Have a great evening. Oh, man. Thanks, Steve. I mean, that means a ton. Thank you so much, my friend. And if you guys don't follow Steve Burns on Twitter, please do. At S Joseph Burns. But boy, that's thank you. Really means a lot to me. Thank you, Steve. I enjoy teaching what I've learned from you. Couldn't have done it without you. Okay, so Mount Doji, I got a couple questions about thoughts on three tickers. SMH. Let's take a look. Yeah, SMH doesn't look bad, Mount Doji. I mean, I do like that we came down, we started to form this base, we had a strong move. We moved back above the 200-day. We also we also closed above the 10-day because, you know, in these counter trend trades, that 10-day acts as resistance a lot. So this doesn't look bad. RSI is 43, so it's probably giving you 7 to the upside and maybe 13 to the downside. Yeah, I don't think I would have any problem with buying this here. But ideally, I would like to see it move back down a little bit and backfill a little bit to give me a better risk to reward ratio. Because I wouldn't be surprised at all if we continue up tomorrow and then come back down a little bit. I mean, all in all, the big picture on this, I think, is really good. But in the next couple days, I'm just saying I think we might be able to get a little better price. But it looks really, this looks good. I mean, strong, clean break above the 200, the 250, the 10, and back in the -1, above the -1 ATR channel. So I think that looks really good. Let's take a look at the weekly. Well, the weekly rejected the 100-week moving average and the 50 closing above it, so that's positive too. We might find some resistance in halfway of this big bar here though. So, but yeah, I like that one. Let's look at Snap. Well, I mean, obviously Snap is very bullish. I wouldn't buy it at this level here because we're at a 67, 62 RSI. So, you know, we're knocking on the door of 70. So I don't think the risk to reward is good at this point. If we move back down into the halfway range, it would give you a much better risk to reward. But right now it's a little too high. I mean, if it went above 70 and below 70 tomorrow, that's where I would get out if I had the position. So very, very strong, but technically risk to reward, I don't like it. And then ESPO. Oh, doesn't look like I have that chart in my available for me, Mount Doji. ESPO. And then let's look at Uber. I don't know if Uber has enough. Yeah, see, Uber doesn't have enough bars in order to give us our indicators. I mean, to have the 200-day moving average, we have to have at least 200 bars, right? Did trigger a fractal. Here's a fractal. I don't need indicators to let me know that. It's a 70 RSI though. It's a little high. I don't think I would take it. William, are there better times to take a 30 RSI dip, like in Intel on 5.3 the RSI failed and 5.29 Intel stayed range bound compared to SPY it gapped up the next day? Okay, let's take a look. So one of the filters I use for the 30 under the 30 RSI and back over the 30 RSI, William, let me see, 5.3. Okay. So yes, we went under the 30 RSI and then back over the 30 RSI here. You know, I may have taken this trade, but not just because we went under 30 back over 30, but also because we went under the 100-day and closed back over the 100-day. I don't think I would have taken this just standalone if it was under 30 and back over 30. The reason why is because it was under the third ATR channel. I don't really, you know, here it was under 30 and we took it right here because it closed back over 30, but also closed back in the third ATR channel. So that's the difference, right? I mean, here if it goes under 30 back over 30, but it's still under the third ATR channel, it still concerns me. Let's look at I think, what'd you say, SPY? Again, I bought this here because it went under 30 back over 30 and closed back up into the third ATR channel. So if it just goes under 30 and back over 30, but it's still below the 30R, the third ATR channel, I tend not to want to buy that unless there's a double bottom with the divergence, something like that. Does that make sense, William? That's kind of my filter. If we have a double bottom and divergence and we go under 30 back over 30, then fine. But if it's just a standalone under 30 over 30, but it's still under the third ATR channel, then it's usually not enough for me. Like here on 3M, we went under 30 back over 30, so that's good. And it also closed back up into the over the 30 ATR channel. Mount Doji, no worries about Uber. Thanks for looking into the others. Didn't realize Snap finished that high at the close. Yeah, monster close. What a day, huh? But again, keep your powder dry, keep your emotions in check so that when you do have good signals, I mean, think about the signals we took yesterday. They were scary, right? This was scary, but we took it because it was the right one. This was scary. People are always wanting to buy the dips in hindsight, but when buying the dips in real time is scary because there's a lot of fear, and that's what you're buying. William says, yes, does that include a V1, V2? Yeah, if it goes under 30 and back over 30 and triggers a V1, V2, that's better. I actually might even take that trade if it's under the third ATR channel, because now you have two different indications, under 30, over 30, V1, V2. Of course, if it was under 30, over 30, V1, V2, and it also was under the third ATR channel and closed back up into the third ATR channel, that would be even better. But I guess what I'm saying, just by itself, it closed under 30, back over 30, without being above the third ATR channel and without a V1, V2. Those generally I'm probably going to pass on. William, it has to close within the ATR channel. It has to close, yes. Like, here's DDM. Here's the negative 3 ATR channel. Here's the plus 3 ATR. So anywhere in this is within the channel. Yesterday it went under the channel, back over the channel, and went under 30, back over the 30. Compared to, let's see if we can find, here's Alibaba. Let's just say here it was under 30. Let's say it went above 30 here. It went above 30, but it still did not close back into the channel. Here it did close back into the channel. And this is good. I don't think there's any problem with taking this trade, but because I had bought the cues, that's why I decided not to add this on. But this is a good example. Under 30, over the 30. It was under the channel, back in the channel. Mount Donji, which books would help me learn how to identify the V1 or V2 formations? Would Steve Market Signals help with that? I learned V1, V2s from Kerry Lavorne. He's a trading partner of Dr. Alexander Elder, and really, really smart guy. He doesn't have any books. He's just spent years studying the market, and I've studied with him one-on-one. Unfortunately, there are no books about V1s or V2s. Let me see. But really, they're not that hard to identify. Let me see real quick if I can. Sorry, I know the screen's blank there. I'm going to move this over. And I'm going to move this over. So here's a good example of a V1. See how we've moved up, we've come down, we move sideways. You see how this bar goes lower than the previous day, but then closes above the close of the previous day? That is considered a V1 because it goes below the previous day and then closes above the previous day's close. And in addition, it went under the 1 ATR channel, back over the 1 ATR channel. So that is a V1. A V2, see, this bar here went below the previous day. If it would have closed above the previous day's close, it would have been a V1, but it did not. It closed under. So it's not a valid V1, but then you have another chance on the next day for the next day to close above the previous day's close. So that is considered a V2. So, you know, if you spend some time on your charting software, just start going through looking for V1s, V2s. After a while, you know, they're going to just pop out, just like, you know, reading English. It's just going to be easy. But, you know, it's important to go through your charts and simulate through your charts. You know, a lot of times I've done hundreds and hundreds of hours of this, and you know, on this particular chart, I will just go through one day at a time. Anything there? No. Anything there? No. Anything there? No. And I will just go through and just simulate trading. I mean, you know, I can do a year's worth of trading in 2 hours. And so if you have the ability on your charting software to just go through, look for a potential entry, what is this? Alibaba? Do you see any entries? I don't see any entries yet. This was a V1. See how this goes below the previous day's low and then closes above the previous day's close, Mount Doji? Boom. You were scared money yesterday. Yeah, it's scary. For sure. A V1, V2, the upside, you are concerned with the close of the bar. In regards to the downside, would you take note of the opening of the bars? Example, TLT. Okay, let's take a look at that. So, yes, V1s, V2s work to the upside or the downside as well. And this is a V2. Here's day one. Day two goes above day one. Day three closes below day one's close. So if this bar went above and then closed below here, we would have had a V1. But this bar closed below day one here, so that's a V2. Now, to complicate things even more, Carey has a filter. If you have a gap that creates your V1 or your V2, then it doesn't count. And this gapped. So if Carey were trading this, he would not trade this because yes, it is a V2, day one, day two, day three, but it gaps below the trigger price of day one. So I know that probably is a little confusing. In the future, as we go through more examples, I'll point those out. But yes, V1s, V2s work to the upside or to the downside. But remember, just because you have a V1 doesn't mean it's not the end all be all. There's V1s, V2s all the time, but they have to be in the context of something else, like a double bottom, like a rejection of the 30 RSI and back over the 30 RSI, or rejection of the moving average and back over the moving average. I don't think they're strong enough to extract any money out of the market just by themselves. It has to be in the greater context. You know, on TLT, we did hold the 70 RSI though, right? That might be an issue for the market. If it would close below 70, that would have been a lot better. Okay, anybody else have any other questions for today? Did anyone have any positions today? Did anyone, was anyone able to participate in this rally today? That was great having Steve Burns come by, right? Man, what an honor. What an honor. All right. getting my carpets cleaned today. So that'll be good. All right, everybody. Well, I think that's it. What a great day, especially after all those weeks of just dripping down and dripping down and dripping down. Although we did have a profitable day yesterday, which was, I think, pretty good. So, all right. Well, on the way out here, I'm going to have to play the U.S. government required disclaimer. And thanks again for everyone showing up. I appreciate it. If you haven't hit the thumbs button, do it. And I hope to see everyone tomorrow and during the last hour of the market. And we'll see if this rally can continue or if it runs out of gas. So, all right. Hope everyone has a nice day. And thanks again. And hope to see you tomorrow. Bye, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.